What's going on, everyone? Activated back again, and I've got a special video for you all. We're going to break down everything that you need to know about the Japanese yen. Well, Mr. Oriogato. There's going to be 5 segments to this presentation for you all. The first, we're going to do a quick overview of Japan's recent history. Then we're going to cover why the yen is a safe haven. We're going to break down Japan's economy. I'm going to go over a couple things to watch out for while trading the yen, and then a few ideas to its recent weakness. So, first and foremost, a quick history lesson on Japan. So, despite having suffered enormous devastation during World War II, Japan enjoyed an economic miracle in the second half of the 20th century, during which time the yen became one of the leading international currencies, rivaling the sterling and the dollar in international markets. So despite its size, Japan has notably been lacking growth since the collapse of its equity and real estate bubbles in 1990, which is referred to as the lost decade. Because of this reason, between the years 2001-2011, the growth rarely exceeded 2%, and actually from 2012-2015 it went down 29%. Japan is also notable for inflation, or rather its almost near absence of. It actually has some problems with deflation for much of the last 20 years, believe it or not. The BOJ has pursued policies with very low interest rates in hopes of stimulating demand and economic growth. Well, at various points in the 2010s, real rates in Japan were actually slightly negative, believe it or not. As to why the Japanese yen is a safe haven. The first, Japan has a positive net foreign asset position. And so what this means is in times of crisis, the story goes that investors in Japan will sell their foreign assets and bring that capital back to Japan as a defense tactic. This process puts upwards pressure on the yen and causes it to rise in value. Next, we have 0 to negative interest rates. This makes it appealing for carry trading. So during times of crisis, people tend to sell assets and borrow less. So when those borrowing positions are closed, the yen gets increased in price. And the last reason why is, believe it or not, a lot of people look at yen as gold, and it's one of those phenomena where if enough people believe it, it becomes true. So, I guess the boogeyman could be true too, right? Japan is one of the largest economies in the world, with one of the highest GDP among nations. It's also the largest exporter in dollar terms. It's one of the oldest major economies in the world and has one of the lowest fertility rates. That suggests an increase in the aging workforce, with fewer and fewer younger workers to support the economy through taxation and consumption. Because of this, Japan, once almost closed to immigration, recently began opening its borders again to bring foreign workers in to address labor shortages. Japan also has a very advanced economy and a well-educated workforce. So although industries like shipbuilding have somewhat migrated to countries like China and South Korea, Japan is still the leading manufacturer of consumer electronics, autos, and technological components. So this has left Japan with a significant exposure to the global economy. If we were to break down Japan's GDP, it would go something like this. You have manufacturing at the top, doing semiconductors, consumer electronics, optical fibers, autos, fax machines, optical media. Then you have farming, which they actually have the highest crop output per land available out of anyone. Then number 3 is fishing. So they have a wide array of saltwater and freshwater fish, with 30% of their fishing industry being made up of fish farms, commercial fish farms. So it's actually not even caught in the wild, which is good for the environment. Number 4, we have tourism coming in. There's lots of great places in Japan to take a vacation. If you haven't, I suggest checking it out. Special note, Japan is actually the world leader in biochem and food fermentation process. Mind blower, bet you didn't know that one. Things to watch out for while you're trading the yen. The first and foremost is something called the Tankan survey. It's particularly noteworthy, all right? Many countries report information on business confidence, and the Tankan is a quarterly report published by the Bank of Japan. It's very important, all right? Basically what that means in a nutshell is follow the Tankan report if you trade yen. It's gonna cause shifts in Japanese currency and stocks. The next thing to watch out for that a lot of traders don't know about, they don't know this about yen, is oil, you guys. Oil is heavily consumed in the process of manufacturing. So if you have a nation like Japan, they have they have hardly any natural oil, right? Because they're a small island, so they're going to have to import all of their oil. Manufacturing takes a lot of oil. So if the price of oil goes up, you can imagine the strain that it puts on the manufacturing in Japan, cause them to raise the price of their items that they're making, slows down manufacturing. It causes havoc. So always, always, always watch oil. It's one of those price correlations that doesn't really change because, again, it is essential in the process of manufacturing. And for the sake of like organization simplicity, I'm not going to go into any more price correlations with the yen on this video. I'm going to make a video specifically for price correlations. We're just going to continue on. Those were like the two main things, the Tankin survey and then oil. Some of the reasons why the yen has been so weak lately. So the biggest reason is the move towards higher interest rates in the US dollar, making it more appealing to foreign investors. They want higher returns. The thing is, if you want to buy a fixed income asset like a treasury bond from the United States, and you're in Japan and you have yen, you have to exchange that yen into US dollars to buy that fixed income asset. So that fluctuation of cash flow into the USD causes it to get strong, right? So Kuroda, who famously rattled the markets with a surprise shift to negative interest rates in 2016 before settling on yield curve method control, keeps saying that it's too early to cut back monetary easing right now and raise the rates in Japan where inflation remains relatively muted. Japan's economy has been feeling a bit of pain lately over the Russia-Ukraine conflict, not just because it's caused the price of oil to go up, but that strain, because Japan is such a big trade ally with the United States, you're going to notice the yen gets a lot of strength, it piggybacks a lot of strength off of USD data. So when there's conflict in the world, it really messes with a country like Japan that tends to be smaller. They're an island nation. Those are a few ideas as to weakness lately, but keep in mind, as market sentiment shifts to risk off, the yen's safe haven is going to come to play and it's going to shine. It'll be interesting to see how they recover over the next coming months with everything that's going on. I hope Japan will be all right. I hope the US dollar will be all right. I hope everyone will be all right. But until then, I hope you learned something good in this video. I'll see you in the markets. Secure the bag. I'm out of here. I'm going home. But I'm home. What am I talking about?